live today, but we're going to go live in a different way because it is precisely 9:10 p.m. I'm going to say the date, the time. Oops, wait a second. I wanted to change. Ah, oh, damn it! I wanted to change the camera angle so that way it goes forward. Yeah. Anyway, it is 9:10 p.m. Okay. Now we're going to do a little bit different this evening, only because I got banned. Not I didn't get banned from TikTok last night, but my live show got timed out. So basically, I can't do a live show tonight. That being said, we're going to do a live show in segments. So we're going to do, okay, Doc, hold up a second. We're going to do it in segments. So I'm going to do a 10-minute video, hit pause, send, and then I'm going to do another 10-minute video, pause, send. So I'm going to do a whole bunch. Ivan, how are you today? So we're going to do one at a time. And starting out, first off, my name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride for a simple, safe, predictable, consistent 1% per week. That's over 50% per year. Now, is that guaranteed? No, not at all. But here is what it is. It is an opportunity to show you something different. The one thing I ask everybody is to ask yourself, does it make sense? That's the question. Does it make sense? Okay? If it doesn't make sense, don't do it. Don't waste your time. I'm looking for a simple, safe, predictable, consistent 1% per week. Now, I do that with pre-qualified dividend stocks. Those are companies. Okay, hold up, Cloudy. We're doing a little bit of a different approach tonight, so just sit tight. I do that with companies that have consistently increased their dividends every single year for a minimum of 2 decades. That being said, let's move on and get started. So, the stocks that I like, here we go. You ready? Dividend Kings. 54 companies that have increased their dividends to their shareholders for a minimum of 5 decades. That's over 50 years. Some of them have even increased their dividends up to 70 years, consistently, every year, year after year after year. That's pretty freaking cool if you think about it. Okay, that being said, second requirement that they need is weekly options. Now, the reason why I like weekly options and not monthly options is because monthly options are just not quite making the cut, so to speak. So put it to you this way. Monthly options, you can only do 1 per month, 12 per year. And if your average return on an at-the-money call, I'm going to talk a little bit about that in a little bit later, but the trade you can do in a monthly optional stock is only once a month. And you average between 1 and 3%. Okay, fine. That's 12 to 36% per year. But take a look at the flip side. Weekly options. Every 7 days, a new option. If you like a company, great. Every 7 days, you can write a stock option against it. Well, what does that mean? Well, if I buy it for $100, I can sell it to someone else for $100. Collect a premium for doing that for them. And that premium is usually 1% or more. So 1% per more every single week is over 50% per year. Evening, and how are you today? Doing things a little bit differently tonight because TikTok thought they'd have a little bit of fun and cancel my live for the night. So it's going to be live but in segments. This way, everybody can watch 10 minutes at a time. Anyway, yeah, I'm going to see how it works out. I thought it'd be fun. Just, give it a try. Every time the clock stops, I hit OK, and then I hit send. That's going to go first 10 minutes of the evening. Then I'm going to hit record. Then I'm going to hit send. And it's going to do that all night long. It ought to be fun. Okay, so this is episode number 1 for this evening. All right, so let's see how much fun we can have. Now, I'm not going to take a lot of questions, only because I'm just going to do my whole stock list, one after another, after another, after another, every single one that I like. Morocco, signing in from Morocco. Well, thank you very much. I'm honored. Thank you. Anyway, so let's continue. And we are going to jump in with how the trading strategy you're about to see came into fruition. Well, number one, in 2008, I was self-employed, blah, 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 had a family. My 9-year-old daughter jumps up on my lap and says, Daddy, please teach me what you're doing. Okay, at 9 years old. Okay, so here's the challenge. At 9 years old, this is going to have to be simple. It's going to have to be, ooh, Rhode Island here, cool beans. It's going to have to be safe, predictable, consistent, and no way for her to lose. So I'm trying to think, what trading strategies are there that are simple, safe, predictable, consistent, and no way to lose? Well, other than the fact that there's risk everywhere you look, no matter what, because you could buy something and go down, you could buy something and it goes up. But needless to say, the 5 criteria: simple, safe, predictable, consistent, no way to lose. Okay, so how about the covered call? It is simple, safe strategy. You know what your profit's going to be even before you do it. Okay, most people buy a stock and have no idea where to get out, or for that fact, where to get in. All right, so let's say, hypothetically speaking, you like a certain company. Now, the only companies I'm going to rattle off are the ones I actually trade. Now, those are the dividend kings, dividend aristocrats, dividend champions, dividend contenders, and of course, I like to peek over the shoulder of Mr. Warren Buffett. Take a look at his list and see how they look. Now, I have a certain strategy. It's going to be, by the numbers, 1 + 1 = 2, 2 + 2 = 4, so on and so forth. It's going to be simple. I'm going to cover every single thing. I'm not going to hold back anything. And we're just going to go, I'm going to label these one at a time, each video, because I'm doing the whole night. I'm just a little peeved with the powers that be trying to manipulate me. Anyway, let's go in. This is number 1. We're just getting started. Because we start at 9, we're going to end up at 11:30. So let's see how many of these videos I can do before 11:30. Now, I have a list of about 300 companies, so I'm going to try and see if I can do every single one of them, or put a big dent in it. All right? Sound like fun? Let's get started. Now, wait a minute. Let me do some disclaimers, because I know at some point someone is going to bitch, moan, and complain. Okay, the average American will complain about a free lunch. So if I'm giving you free information, just take it for what it is. It's free. You don't like it, don't use it. But before you're done, always ask yourself the one very, very, very important question. Does it make sense? Okay, so let's get started. The first on my list is, once you take a list, like I said, dividend kings, dividend aristocrats, dividend champions, all those. Once you take that list, I throw mine into a calendar. The calendar tells me when the company is going to pay its dividend. Now, why is that important? Well, it's important because if a company is profitable, they're going to increase their dividends year after year after year, because it is in the corporate charter somewhere that a portion of the profits go back to the investors. So if the dividend increases every single year, well, their profits have to increase every single year. It alleviates me from actually looking at those stupid books. Quarterly reports, annual reports, no. If the dividend goes up, they're making more money. Simple. Remember, my daughter was 9. This had to be simple. Okay? Dennis Mancini, how are you this evening? Dennis, we had a little bit of a twist tonight. We're recording each and every episode. So, here we go. I love the big ladies. Oh, that's... All right. We got some of the comments you guys keep to yourself. So, we're going to get started. Once you get that list, dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list, there's about 300 companies in that compilement of 5 lists. Okay? So, out of those 300 companies, they all are consistently profitable, 20 years or more of increased dividends. They all share the profits with us. We're the buyers, we're the sellers. And they all have weekly options, because I want 1% every week. That's how I get by, so to speak. I've been working since 1973. It's time for me to take a break and have fun. We're getting close to the end of the first video, and we're going to jump in and start off the list in the first quarter. Now, the reason why we're starting at the first quarter is because when these companies in the calendar start to pay the dividend, they are going to be weekly, because there's 13 weeks in a quarter. So the first quarter looks the same as the second quarter, which looks the same as the third quarter, which looks the same as the fourth quarter. So we're going to start out with week number 1 of the first quarter, and then we're just going to go all the way through. Here we go, 10 minutes, we are done. First one done. Post. There you go. Come on. I gotta wait for it to post. Are you kidding me? Live. I'm not able to do live. Okay, post. Okay. All right, so now we're on episode 2, 921. I don't even know if that posted or not. I hate when that crap happens. All right, so that being said, once you have all your lists into the calendar, and you break it down by the week, because there's 13 weeks in every quarter. January, February, March, first quarter. April, May, June. July, August, September. October, November, December. Week 1, 2, 3, 4, all the way up to week number 13 is 13 weeks every quarter. After week 13, well, we start back over again. Okay, we are currently in the 4th quarter. What's the point in dividends? A saving account pays more. Yeah, well, then you're definitely not paying attention. When I say 1% per week with dividend stocks using weekly options, 1% per week is over 50% per year. So I'm not quite sure what savings account you're putting your money into, but I'm pretty sure everybody would like to hear it. Anyway, let's get let's get a move on. All right. All right, let's go all the way back to January, which is the 1st quarter. All right, here we go. First one on the list is going to be, come on. Gotta wait for it to post. There it is, right there. Comcast, CMCSA. Now, every single stock you're looking at is going to be something you probably recognize, because all the companies I invest in have well, they're household names. We know them all. We're going to get to them all. Comcast is first on the list. Let's get moving. CMCSA. And there we go. Now, what I'm showing you is called Think or Swim. And here are the numbers for the stock. Okay, the last traded price, also known as the close, the open, the high, the low, the volume, that's how many shares traded, and the bid and the ask, what I can buy it for, what I can sell it for. That's the stocks. Now, underneath that, this is what's called the option chain. Now, an option is the right, but not the obligation, and, well, there's call option and put option, 2 different kinds. Call options is what we're going to be dealing with, and I'm not going to get any other strategy but one. That's it. Covered call with a stock option. So you buy the stock, you sell an option against it. You're basically giving somebody the right to buy it from you at a certain price by a certain date. Okay, I like the weeklies. 8 November 24, that's this week. 15 November 24, that's next week. 22 November 24, that's the week after. Every single week. Now, people might say, do I sit in front of my computer? No, I do not. Okay, 10, 15 minutes a day is all I need, because I'm only looking for specific things. Now, first, gather your list. Second, put in a calendar. Anyway, let's go. Comcast. First thing I want to look at, 5 things. Number 1, the high. Number 2, the low. Number 3, where was it a year ago? Number 4, where is it now? Number 5, what's the direction? Sideways, down, up, down, up. So currently she's pulling down off of this high right there. Okay, it's not that difficult to see what's what. You can get a 3rd grader. Where's the high? Ah, that's right there. Where's the low? Right there. Okay, where was it a year ago? Way over there. Where is it now? Right here. What's the direction? Up, down, up. Same thing. Then I want to check the numbers. What does that mean? Check the numbers. Well, what am I buying it for? What's the current price? And that is the ask price. That's the current price at this moment in time. So what can I buy it for? Now, I'm selling a covered call, which means if I'm buying it at $42.58, the closest strike price, that's the price I'm selling it for, the strike price, is going to be $42.50. Okay, you see that? 42.20, 42.58 is what I'm buying it for. 42.50 is what I'm selling it for. What am I collecting? Well, I'm collecting this right here. This is called the premium. This is called a call option. Basically, what's that going to do? If I buy 100 shares of this stock, I sell somebody the right, not the obligation, the right to buy it from me at any time between when he pays for that option and I receive the cash and the date of expiration. And in this case, it's this Friday, the 8th of November. All right, so I'm collecting 66 cents a share. Now, 66 cents a share on one contract is only 66 bucks. So what does that mean? Well, let's pull up the calculator and I'll actually show you what it means. Arnold, how you doing? Okay, bring out your calculator. Get rid of that. First off, we're going to take the profit, okay, right there. 66 cents. Put that into my calculator. 0.66. Okay, now if you notice, I'm buying the stock for $42.58 and then I'm selling it for $42.50. Well, I'm losing 8 cents right off the top. Well, let's take the 8 cents out of the profit. Okay, great. Well, take the 8 cents out of the equation, minus 0.08. So my actual profit's only going to be 58 cents a share. All right, so let's do a little math. If I'm only making 58 cents a share, let's divide the purchase price. Whoops, that's not right. That's funny. How can I monetize? Oh yeah, that's lovely. All right, 60. Let's do this again. 66. Subtract 0.08. All right. Now, my profit is 58 cents. I'm walking away with 58 cents. So I'm going to take that. I'm going to divide it by the purchase price. What am I paying for it? Divide it by 42.50. That's the strike price. What I'm selling it for. Well, why aren't I putting the 48.58? Sorry, the 42.58. Well, I'm not putting the 42.58 because I already took the 8 cents out of the equation. Okay, so we're going to find out what our rate of return is for the week. Okay, now remember, we're 1 day short. Yesterday was Monday, which is today, but it's after hours. So today's done and over with. So you have 5 days of time value. That's why we're doing. We're selling covered calls. We're selling time value. That's a component of the option. There's a bunch of components of the option. You can figure that out if you really want to through the Black-Scholes pricing methodology of stock options. Really weird combination of mathematical. It looked like vegetable soup. Not vegetable soup. Alphabet soup. That's what it looks like. The mathematical equation to figure out the option pricing. Yeah, it's like alphabet vegetable soup. There you go. Anyway. Okay. Anyway, let's keep on keeping on. All right. So that being said, this trade right here, if I like Comcast, because that's a very important question. Okay, we didn't go over the 5 rules yet, did we? But we'll go over that in a second. Now, if I like Comcast, number one, and if I'm buying it tomorrow morning at $42.58, I sell someone the right to buy it from me at $42.50. Now I'm collecting 66 cents, but I got to take 8 cents off of that, so I'm walking away with 53, I think it was. Oh, I'm walking away with 58. So 58 cents per share on a $42.50 stock. That's a 1.36% for the week. Okay, now how long does it take me to do this trade? Not even 2 minutes. Because I already have my stock selected, so I never ever have to worry about what am I looking at next. Because the calendar tells me exactly who I'm doing next. Okay? It tells me exactly who I'm doing next. So let's keep on track. Let's actually do a trade of Comcast so you see what it looks like. That way, I'm not hiding anything. I'm going to do this quick because we got 1 minute left. Okay, so its stock is currently at $42.58. I want to do the 42.50s for this week. Sell that. Let's do just... Nope. I forgot to change it to covered call. Okay, see, I'm just human. Covered call, 42.50. There it is, 42.50. Just 100, if you don't mind. Just one contract, that way it keeps it simple. Okay, here's the trade right here. Buy one covered call, Comcast, 8 November 24. That's this coming Friday. The 42.5 call against the stock, Comcast 2 open. Right. So my maximum profit, 76 bucks. The current break even, 41.74. What is it costing me? 4,100. Well, let's do some quick math. Clear. $76 divided by 4,174 equals 1.82. Ooh, I missed that one. I can do it again. Wait a second. Wait. All right, hold on a second. This is going to be a little frustrating because it doesn't look like it posted. That pisses me off. So I'm going to go to my other TikTok channel and do there. All right, so I missed the first two. Anyway, here we go. So we're looking at a little bit of a different scenario this evening because I'm not letting me record over here. So the hell with that. So it's not letting me record over here and then post it. So I have to go over to this channel over here and post it. This is going to be an interesting evening, but I'm just going to keep on going. Currently, we're looking at Comcast. Let's get out of there so we can start the whole damn thing over again. All right, so I'm looking at Comcast. I'm thinking of doing a covered call on it. Covered call is the simplest, safest, most predictable, most consistent, in my humble opinion. I got to throw that in there so that way people don't get all weird on me about it. Alrighty, Comcast. We all know what they do. Let's take a quick gander. Let's see if that works. See if that works. So it's not like record over here and then post it. Post. Oh yeah, I'm gonna have to do it every 15 video. Oh, this is gonna be fun. Every 60 seconds. This is gonna be freaking ridiculous. So Comcast, here's a high, here's a low. It's where it was. This is where it is. Look at the direction. Up, down, up. So she's going to the upside. Currently, right now, she's at 42.58. The closest strike price is going to be the 42.50. It's paying 66 cents per share. That's over 1%. That works for me. Quickly, let's go over here. Drop down to a covered call. The 42.50s. Right there. 100 shares. Okay. Buy one covered call, Comcast. And I missed it already. Okay, of Comcast. One contract, 76 bucks. Buy one covered call, Comcast, 100. Those are the weeklies. 8 November 24. That's this coming Friday. The 42.5 call over the Comcast stock. So I'm actually selling a stock option against the stock that I'm just buying. So you buy the stock first, sell the option. But here it does it in one swoop. So you're buying and selling at the exact same time. I already know what I'm going to make. On this particular trade, it's $76 per contract. Okay, great. So what does that come to? Well, you take your 76, clear this, $76 profit, divided by what you just put into it, 42.58 per share, 42.58, and that comes to a grand total of 1.7% for the week. Well, that's not bad if you think about it. Okay, 1.7% for the week. All right, great. Let's take a look at something else. That's Comcast. Let's get out of there. Let's get out of here. Let's go back to here. All right. Next on the list, we're going to send Comcast out on this channel here. See how that worked. Oh, I got to add a description, don't I? All right. Session 1, 9, 12:35 p.m. Done. Send. Post. Cool. While that one's posting, let's do another one. All right. Well, the first one's posting. We are now on session 2. It is 9:36 p.m. Session 2. All right. So we're looking at Comcast. I like Comcast. It's been around since the 1960s. It's over. I think it was last I checked, it was 60 million monthly customers paying them every single month. 60 million. That's the last time I checked. It's probably different now. But anyway, I like the numbers. I like the chart. Let's take a good look, because this is just a 1-year chart. It doesn't tell us much. The high, the low, where was it, where is it, what direction is it going? Great. Now let's break it down. Look at the 90-day chart. 90 days is right about here. First thing I always want to see, where's the high? Where's the low? Looks like here or here, but it's close, the low. Where was it? 90 days ago. Where is it now? All right, what direction? Well, down, up, down, up, down, up, down, up. Now she's coming back down again. This is a 90-day high. Well, the last 90 days, this is the high, this is the low. So let's zoom in and take a look at the last 30 days, because the last 30 days are going to give us a better idea of where we think it's going next week or tomorrow. Because if I'm thinking of jumping into this one tomorrow morning, well, I want to see what the numbers are going to look like. It's already a no. I can figure that one out because she's coming down from a 30-day high. Okay, so your 30-day high is here. Your 30-day bottom's over here. So she goes up. Is your profit taking back up? Well, now all the profits are starting to be taken, whatever. So it's going to have profit taken. It's going to come down. Probably somewhere down around here, but we'll keep an eye on it. As soon as she finds the bottom, touchdown, and then she turns around and goes back up again. Well, that's what I'm waiting for. Okay, she's coming down. She's going to turn around eventually. So I'm going to write it on the list for next week, just in case some of you guys are watching and listening. CMCSA. All right, so that's Comcast. Let's see what's on. Johnny's almost behind door number 2. Here we go. Door number 2 would be the Gap. GPS. Well, we're going to do all of them. Okay, we're going to try to do all of them, see how far we get. The Gap, GPS. First thing I want to do is GPS into the chart. What is it telling me? What's it telling me? Oh, wait a minute. The Gap is, they changed this ticker symbol. Okay, it used to be GPS. Now it's just Gap. All right, so that being said, first thing I always want to look at, high, low, where was it? Where is it? Which direction is it going? Up, down, sideways, or channeling. You can call it channeling. Look at a nice little channel that thing made. So, 21.77, the closest strike price. We get two out of this one. The 21.50s and the 22s. Okay, the 22s will give you a little bit more money, okay, because you're getting the difference between 21.77 and 22. So what's that? It's an extra 23 cents per share. This is always per share, because 23 cents isn't anything to get worked up about. But when you get 500, 1,000, 5,000, 10,000 shares, yeah, it adds up. Okay, so an extra 23 cents there, and you're getting 41 cents here. That's 64 cents on a $21 stock. That is very close to 3%. Well, let's take a look. Okay, so if I'm getting a 23-cent difference between the purchase price, what I'm buying it for tomorrow morning, what I'm selling it for, 22, the difference is 23 cents. Okay, 0.23. And then the premium, if it goes over 22 by next Friday, okay, oh, no, sorry, by this Friday, well, I'm going to be collecting whatever that is. Well, let's take a look. 41 cents. So 23 plus 41. Okay, so I'll be walking away with 64 cents per share. Okay, well, let's divide it. How much, what kind of a profit is that? So you take the 64-cent profit, you divide it by the purchase price, 21.77, and you walk away with 2.9% for 1 week. Now, Yeah, Jindra, I can check on it. Just give me a little bit. I'm on a mission at the moment. So 2.9% for the Gap. I'm pretty sure we all know who the Gap is. Okay, they're on my list. Okay, so that being said, 2.9%, I like that idea. But let's take a look at the chart and see if the chart is saying yes. All right, so let's go. High, low, was, is. No, was, is. All right. What direction? Up and then down. Let's check it out. A year ago was the bottom of the year, and that was 1301. Okay, we topped out the beginning of June at 3075. So the last 90 days would be 8 right there. Here we go. Last 90 days. High, low, was, is. Look at the direction. Just to the downside. But if you want to break it down, because we're doing it weekly, we're not doing monthly, we're not doing annually. So I want to break it down weekly. Down, up, down, up, down, up, down, up, down, up, down, up, down, up. Well, it's currently going to the upside. Your high's way up here, your bottom's way down there. Okay, I like 2 days the upside after a 30-day bottom. Let's zoom in a little bit closer to see what the last 30 days look like. Okay, here's the last 30 days. It gives me a better idea of what's going to happen by this Friday, usually, because humans are basically all the same. Right? Down, up, down, up, down, up. She's going to the upside now. We have all this from here, but what am I looking to get? I'm looking to get 1%. There's 1% and there's plenty. Okay, so the 22. Let's see what the math looks like. I'm going to change this to covered stock. Get rid of that because we don't need it. And we're going to take a look at the 22. There it is right there. Let's do just 100 shares so people don't go freak out about the numbers. And here we go. Buy one covered call against Gap. 100s. Those are the weeklies. 8 November 24. That's this coming Friday. The $22 call strike against the shares of Gap. So you're buying and selling at the exact same time. Great. What's my profit? My profit here is $83 per contract. Here's my break even, $21.17. Well, it's currently $21.77. So anything over $21.17 is going to be a profit. All right, so what am I making off of this? $83. What is it costing me? $2,117. Well, calculator. $83. And it's costing me $21.17. That's a 3.9% return for the week. But the big question, you ready for the big question? Do I like this company? Okay? Do I like it enough to buy and hold on to it? That's a very important question you got to ask. All right. Let's get out of this. Let's get out of that. Let's get out of this. Ooh, I didn't do the seasonality on the Gap. Let's check that out. Now, we're going to go through this quicker and quicker as the night progresses. But right now, we're going a little slow because I got to get the newbies caught up to speed. This here is a, what do you call it? A seasonality chart. All the way to the left is January 1st. All the way to the right is December 31st. That's the whole year in a glance. Okay, let's bring this over a little further so we can get a better view. The blue line represents the movement of this year. The blue dot right there, that represents today. The red line is 10 years worth of data. That's 2014, 2015, 2016, 17, 18, so on and so forth. 10 years. What is the average move? What does this company normally do this time of year? Well, let's zoom in because we're right here at the beginning of November. I want to take my cursor, put it on the blue dot, left click, drag right. That opens up. Bring my crosshairs right there. What does that show you? Over the last 10 years, this company consistently went up. And then she topped out and then she dropped down. So this is the area I'm looking at right here. Well, I'm only looking at this week. 4 days left. Okay, 4 days left. Can I make more than 1%? 1% a week, so over 50% per year. Okay, so that being said, let's move back over to here. Let's take a look at that number right there, the 22. There it is. Oh, wait a minute, we already did that. So, yeah, we already did that. Get away from myself. Adam Devine, how you doing? So, that being said, the question you need to ask, do I like this company? Do I like it at this price? Can I see myself owning this for a long period of time? These are questions you got to ask. Because if you don't like it, if you don't understand it, don't buy it. Whoops, I got to go backwards. I didn't label that video. Come on, here it is. Session 2, 9:46. Session 2, 9:46 p.m. Done. And next. This is going to be fun. Come on, next. Post. Yeah, I'm going to have to change the posting a little bit later. Okay, that being said, let's do the next one. Next on the list. Come on, come on, come on. Let's keep going. 10 minutes. There we go. All right. So that's the gap. Done and over with. Let's get out of there. I should have done that earlier. Got out of there. Let's go back to here. And let's get out of there. Next stock on the list today is going to be Cisco, CSCO. What do we have over here? Doing great. Cool beans. Way to go. Okay, next on the list, Cisco. We are still looking at the first week of the quarter. Okay, Cisco, CSCO. Okay, let's go right there. Let's go here, and let's go here. Okay, CSCO. There we go, Cisco. First thing, always, always, always I want to see. Where's the high? Where's the low? Where was it? Where is it? What's the direction? Down, up, down, up. 55.90. Come on, we all know the closest strike to 55.90 is going to be 56. The 56 is going from 55 to 58. You might be able to get your 1% out of that. Might. Okay? But if you're okay with it, fine. Let's keep on looking. Okay, a year ago we were at 53.33. The bottom of the year was August 9th. That was 44.53. Okay, we topped out just recently. Here's the high right here. 10.21. It was 57 bucks. Okay, 57 bucks is not bad for the high. So let's go back and take a look at the last 90 days. Well, the last 90 days are going to be right about there. Look at that movement. Okay. Okay, up, down, up, down, up, down, up, down. Now she's going to go up. That's the way it looks. Okay, now more than likely, tomorrow's going to look a lot like today. Hypothetically, going to the upside. See? It just makes sense. Now, let's get a little bit closer. The last 30 days. Okay, here's the last 30 days. Okay, here's your 30-day bottom. Here's your 30-day top. When she goes from the 30-day bottom up, there's going to be profit taking. Well, here's your profit taken here. Yesterday, which was Friday, was the bottom. Okay, right there, it's the new bottom. This is 1 day to the upside. I like 2 days to the upside, so this is not going to be as favorable as I would like it to be. Well, I missed that one, which is kind of good because this is not working for some strange reason. So CSCO is going to be a no, only because it's only 1 day to the upside. I like 2 days to the upside. I dare you to go 2 years ago. I dare you to go 2 years ago and guess where it will be going and checking and seeing if you got it right. 2 years ago. Interesting. Please check Pepsi. Give me a second. I'm going to check Pepsi. Okay, we're going to check some Pepsi. EP. Pepsi, first thing I want to see, where's the high of the year? Where's the low of the year? Where was it a year ago? Where is it now? What direction is it going? Okay? Up, down, up, down, up, down, up, down. Now, is she turning here and going back up again? Because that's what she's doing all year. Okay? But before we get there, let's check out the numbers. What am I buying it for? 166.60. What's the closest strike price? It's going to be the 167. They don't have a 167, but they do have a 167.50. But look at the numbers. It's only 1%. That's going to be a no. Terribly sorry. I mean, don't get me wrong. I like Pepsi. They've been around for over 100 years. But it's just not measuring up. Not this week, anyway. Okay? Let's take a look at next week's numbers. So 167 for next week, 208. Well, that's not that much better. Okay, I like 1% a week. So if I'm going to carry it for 2 weeks, I'm going to want at least 2%. So Pepsi is going to be a no. Sorry. Let's see if that will record. Okay. That was Pepsi. And it's currently 9:52 p.m. Done. Next question. What do you recommend for someone that had no, I don't recommend anything to anyone. Terribly sorry. I just don't. Because I have no idea what you have in mind. I have no idea what you're looking for. I'm trying to get this camera working. Oh, don't tell me I can't record until that one's done. Well, that's gonna suck. You just said Pepsi is a no. No, for me. Pepsi's a no for me. I'm not going to buy Pepsi. Okay, I don't tell people what to do. I'm just telling you, for me, it's a no. So my Italian's coming out. Yeah, it's not going to make another one until that one's done. All right, so next one on my list. Let me go back to my list. Okay, we did Comcast. We did The Gap. We did Cisco. Now, American Express. Jill Bruner, how are you? Abelmal. Okay, let me see if I can pump out some Abelmal. The world is about to have a rude awakening. Yeah, thank you. Why do people always feel that I need to hear what's on their mind? I'm doing my own thing. Abelmal. A-L-B. Alrighty, episode 9:53 p.m. Let's get going. All right, so Abelmal. Let's take a look at Abelmal. Here's the high, here's the low, here's where it was, here's where it is. Look at the direction. Up, down, sideways, down, up. So it's currently going up. Okay, cool. Now, I want to take a look. What is it going to cost me, and what am I going to walk away with? Well, it's currently at 101.50, so the closest strike price is going to be the 101. That's paying $4.40. That's cool. Well, let's take a look at that one. Now, I said that I like it. Great. So, what are the numbers? A year ago, that's way over there. A year ago, it was 122.47. The high of the year was the end of last year, and that was 152.99. I don't always get mad. I'm in a zone at the moment. I have a certain idea. Why do you keep passing over me? You ask about knee. Yeah, I understand you asked about knee, okay? I will get to it eventually. All right. What are we looking at? Abelmal. Here's the low. 812.21. Sorry. 71.97. The bottom right there for the year. Then she moves back up. She's currently at $100.57. Okay, so if I like it, let's zoom in, take a look at the last 90 days. Here's the last 90 days. High, low, where was it? Where is it? Look at the movement. Down, up, down, up, down, up, down, up, down, up, down, up. It's going to the upside. Great. Let's zoom in a lot closer, look at the 30 days, just to give us an idea of where it's going to be in the next 30 days. Well, not 30 days, but next, by this Friday or next Friday. Now look at the movement, okay? Up, down, up, down, up, down, up. Now she's going to the upside, but the high of the 30-day period is right here at 105. There looks like there's plenty of space there. All right, well, let's see what the numbers look like. But before we do, let's go to that fifth chart, which is the seasonality. Seasonality tells us where does it normally go this time of year. Well, look at this spot right there. Now, here's where we are right here. Now, that's a tough one to call because it looks like she should spike up in the next week or two, then drop, and then go sideways. If that's okay with you, fine, if you like April. Okay, so right now, April is at 101.50. So the 102s, the 102s are going for 395. So 395, and the stock is 101.50. 101.50. That comes to 3.89%. Well, that's almost 4%. But wait, 101.50. I'm selling the 101s. No, wait a minute. That was selling, the 102s. So the difference between 101.50 and 102 is an additional 50 cents. Okay? So an additional 50 cents on top of what you're making, it's definitely going to bring you a 4.5% for 4 days. Can you imagine that 4 days, 4.5%? If you like this company. That's a question you got to ask yourself. Does it make sense? Do I like this company? Okay, so fine. Let's move on. That was April. That wasn't on my list, but somebody asked for it. So let's get back to my list. My list for the evening. Okay, we did the first three. American Express is next on the list. AXP. Oh, wait a second. Oh, stop programming. Okay, somebody asked to look at NE, and they were kind of insistent on it. NEE, Nextera. Okay, first. High, low. Where was it? Where is it? What's the direction? Up, down, up, down, up, down. Is she bouncing off of this, or is she not? We're going to take a closer look at it, but before we do, 78.37. The closest one's going to be the 78, which is 211. That's over 2%. The 79s, that's close to 2. No, that is over 2% also. So both of them are offering over 2%. Great, but is it the right time? So let's take a look at the chart, and the chart will tell me whether or not it's a good idea at this moment in time or not. All right. That being said, where are we? Okay. A year ago, 59.30. Looks like we got a double. Nope, there's the bottom right there. A year ago, and that was 53.81. Look where the top is. Top right there, 86.10, and that was a month ago. Well, cool. Last 90 days, check it out. Okay, high, low. Where was it? Where is it? Up, down, up, down, up, down. Not quite, but we're going to take a really close look at that one in the 30-day chart, because right now I think that's on the 90-day. 30-day chart, right there. Okay, check it out. The high, the low, where was it? Where is it? Look, down, up, down. We have 1 day to the bottom right there. That was Friday. Friday is the 30-day bottom, but it only has 1 day to the upside. Me personally, I like 2 days to the upside. So you have to figure out what's your rule in the situation. Do you like 1 day to the upside, 2 days, 3 days, 4 days? What tells you where the bottom is to when to jump in? Is it 1 day? Is it 2 days? Is it 3 days? That's a good question, because you're going to make most of your money buying low and selling high. Well, as soon as she comes off of a 30-day high and drops, she's going to find a price, a bottom. Then she's going to turn around and go back up. Okay, so I look at the stock market twice a day, only for about a half hour to an hour. Okay, because I don't have that many positions, 8 positions at a time. 4 or 5 here, 4 or 5 there, so on and so forth. Okay, that being said, well, I like the numbers, but I would prefer 2 days to the upside. That is me. All right, let's stop that one. Stop right there. Why can't I post that one? Damn it. Does he use RSI? No, I do not, okay? I do not need anything to tell me that that's the bottom. And then she goes up. I don't need anyone to tell me that at this moment in time, this is the bottom. Okay, there's no indicator in the world that's going to replace your vision. Because if you see this as the lowest point on this chart, more than likely, that is the bottom as of this moment. Now, tomorrow, she could drop down more. Could, but we don't know until tomorrow. Patrick, Aurora, Patrick, okay, that's what I'm looking at. Anyway, cool beans. So I can't even add anything there. Or can I? I'm not sure. Let's hit another video. Why not? Okay, that was NEE. Next on my list, remember, I wanted to go over my list. Okay, we looked at American Express. Bristol Myers Squibb is next on the list. BMY. That's going to be a no right off the bat. Right? Well, look where it is. Very first thing I always want to see, just to, to cut time. It's currently at the high at this moment. I don't want to buy at a place it's never been before. Okay, I've never heard anyone said, hey, buy the stock at the high and wait for it to go higher. No, you buy low and you sell high. Well, right now, it's high and there's going to be profit taking. In my humble opinion, of course. So let's keep on keeping on. So BMY is going to be a no for this week. Next on the list, JP Morgan. JP Morgan. Alrighty, we're looking at JP Morgan. First thing I always want to see when I look at JP Morgan, the high of the year, the low of the year. Where was it a year ago? Where is it now? What direction is it going? That's plain to see. That's just going up. Okay, well, let's get a little bit closer because I don't like buying at the high, waiting for it to go higher. That's too close to the high for me. AMD, no. I don't like AMD. Okay, if it has no dividends, it's no thank you. No weekly options, no thank you. Okay, but I do appreciate you asking. All right, so I'm not quite sure how you feel about this one, but look, here's your 30-day bottom, here's your 30-day top. Look at where it is. Okay, there's not much room here at the top, and there's way too much room down here. Perfect place for profit taking. That's not what I want to take a look at. That's a no for me. So let's move on to the next one, which is going to be Marvel, MRVL, right there. See, this is what we're looking at. MRVL. I think we did Comcast, The Gap, Cisco, American Express, Bristol Myers Squibb, JP Morgan. Now we're on Marvel. I don't do Forex, dude. Terribly sorry. Next on the list, MRVL. MRVL. That's going to be a no really quick. Wasn't that quick? It was really quick, wasn't it? It's at the high. Yeah, no thank you. I don't buy at the high because it doesn't make any sense. No, I like the stock. I do. That's why it's on my list. But not this moment. But I will put it down for 2 weeks from today. That way, when she drops, it's not an if, it's a when. MRVL. Okay, so Marvel is see you in 2 weeks. Let's go to the next one. The next one. NTAP. Wait a minute. Is NTAP a monthly? Is that a weekly? NTAP. Okay. Oh, bloody raw eating. Okay, first thing, as always, Adam Devine. Ooh, chill. We're just trying to do something new tonight. Just hold on. NTAP. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at all the gaps. Gap, 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 gap. Wow. That's quite a bit. Now, gaps have a tendency to fill for the most part. See? these things just, well, I don't know. I don't, it should, hypothetically. Okay? Hypothetically should, but this one already filled. That one may be filled. Who knows? Let's see. But they usually do. Not guaranteed. Nothing's guaranteed except for death and taxes. But, you know, close enough. All right, that being said, I want to zoom in here before I go further. Here's your 30-day bottom. I'm not quite sure that constitutes as 2 days to the upside, but it kind of is, but it doesn't feel right. Okay, the bottom is right here. Today was close to the bottom. It was definitely a down day today. So it doesn't constitute for 2 days to the upside. So that's going to be a no. And then we progress to the next one. Let's progress to the next one. So NTAP's a no. Oh, check that out. Cisco. We already looked at Cisco, but no, we didn't. CSCO, right here. CSCO and SYY. Cisco, Cisco. Sounds the same, but they're spelled differently. Okay, Cisco, SYY. Here we go. Ooh, see, I like that chart. That looks nice. High, low. Where was it? Where is it? Look at the direction. Up, down, up, down. Right there, it looks like it's starting to go back up again. So let's zoom on into that. But before we do, what am I buying it for? 76.18. What am I selling? 76.18. I believe the 76 is. Don't have a 76. Damn it. They have a 75, but at 75, I'll be losing $1.18. $1.18 off of this, it's not worth it. Even 77.50 is not worth it. So even though weekly, even though it has everything I'm looking for, it's going to be a no because the numbers just don't work for me. I like 1% or more. Okay, now this one is not. That's about 50%. 50%, sorry, half a cent, not 1%. That's a half a percent. So that's what I meant to say. It's a half a percent. So a half a percent every week is 26% at the end of the year, if you're okay with that. Me, I like 50% in the year, so I want the 1% for the week. So no to Cisco. That's a no. All right, next. MasterCard. Ooh, let's put some MasterCard on that one. MasterCard. Whoa, wait a second. Was that right? No, MasterCard's MA. MA, MasterCard. That looks better. That looks weird. And it looks like it might be a no. Okay? High, low, where was it? Where is it? What's the direction? Up, down, up, down, up, down, up. What is this going on? It doesn't make any sense looking at it that way. So let's zoom in and see what it really looks like. Okay. Down, up, down, up, down. Now she's going back up again. If you look here at the bottom, okay, last 30 days was 30 days right there. Okay, this last 30 days, down, up, down, and then 1 day to the upside. I like 2 days to the upside. All right, so that being said, we're going to pass on MasterCard this week because I'm looking for 2 days to the upside, not one. Okay, it doesn't really confirm to me that this is the actual bottom. Okay, because she's dropping from here, going down, only 1 day to the upside, so not quite feeling it. Okay, sorry for those of you who like MasterCard. Next on the list, ooh, Oracle. Check it out. Oracle, AT&T, Verizon. Ooh, let's take a look at Oracle. ORCL. Oh, that's going to be a tough one. A lot of gaps in this one, too. Look, 1 gap, 2 gaps, 3, 4. Okay, look at that. Just up. Up. All right, that being said, let's zoom on in. A year ago, 108. The bottom of the year was a 98.90, and that was the middle of December of last year. Okay, so the top 178, and that was a couple of weeks ago. Let's take a look at the 90 days. Nice. Upward movement. Looks like she's pulling back down now. A little bit uncomfortable here. So let's zoom in, take a look at the 30 days. Okay. The last 30 days. This is a totally different picture from the 90-day chart to the 30-day chart. Look, that's clear as a bell. Up, down, okay? And then she gaps. Gaps have a tendency to fill. This is almost filled. Got a little bit more to go. Now she's going to the upside. But I'd be a little leery of this movement right there today, because she opened up higher today, but closed lower. So I'm not sure. I might have to pass on Oracle also, because there's over 300 companies to look at. So if one of them makes me a little bit iffy, then it's going to be a no. Sorry, Oracle. Let's go to the next one. Next one on the list, AT&T. That's a perfect place to stop and go to the next video. Yay. Okay, that was... Okay. 10:12 p.m. Uh-oh, let's try this again. Session 4, 10:12 p.m. Done. Let's get some color in there. Color, there we go. Come on. There it goes, done. Move up a little bit. And next. I don't think he's in a good mood tonight. Okay, sorry for Slime. I got booted last night from stupid ass shit. So now I can't broadcast live. I have to do it in one 10-minute section at a time. So I figured, what the hell not? Did that one get... Okay, it's uploading. Cool beans. So I have to wait for it to upload before I can shoot the next one. It's weird. All right, so AT&T is going to be next. See if I can record it here. AT&T is going to be next. Let's check it out. So we're going to put the AT&T right here. There we go. And here you have it. The high, the low. Wait, was it? Where is it? Look at the direction. Up, sideways, down. Up. And she's just pulling back now. So it looks as if, we're going to zoom right into here, see what happened in the last couple of days. Yeah, 30-day high was Friday. Yeah, she's coming down now. But look at the movement. Up, down, up, down, up, down. Yeah, no. Isn't that funny? Yeah, no. All right, so we're going to look at it in 2 weeks. Give it some time to drop. Now, certain stocks I like, and I'll just keep looking at them every week or so. Now, it doesn't make sense to take a look at this one next week, only because she's right here. It's going to take about a week or two to get down to the bottom before she turns around again. Maybe we'll take a look at it next week, see what happened. Couldn't upload post. Your post is save and draft. Uh-oh. That's not good. It's going to try again. All right. T. There we go. All right. That being said, Verizon is next. Cool, Verizon. That's weird. Verizon, VZ. Interesting. Look at the thing. First thing I always want to take a look at, the chart. Here's the high. Here's the low. Here's where it was. Here's where it is. Look, up, down. Look at that channel. Then she shoots up, pulls back. She's coming to the downside after the high of the year. What does that mean? It means we're going to have to wait a little bit longer on this one. Let's zoom right in real quick. Okay, look at the last 30 days. Okay. Down, up. Look at gap down. Up, gap down again. Okay, up, and then down, then up. Now she's coming back down. She's going to find a bottom within the next few days. Okay, tomorrow, the next day. Not tomorrow, because, see, 30 days, the 30-day bottom was 2 weeks ago. Well, the new bottom could be today, but we need 2 days to the upside to decide. So I'll take a look at it again tomorrow, and then again Wednesday. Okay, so Verizon, I'm going to write that down. VZ, but it's not good for today. But let's go through the numbers just to see if it is a good fit. So currently it's at 41.08. So what's the 41 look like? Well, it looks like 51 cents. That's over 1%. Okay, so let's take a look. Oh, what does it do historically? What does it normally do every year? Well, take a look at the last 30 days. I mean, to the end of the year. Well, that's a nice deal. Okay, for about a week, she goes sideways, then she's going to shoot up, then she's going to shoot up again. Cool. Well, I like Verizon into the end of the year. Now, that movement is not guaranteed. That's just historical performance. What did it do last 10 years on average? MW, how are you today? Can't find you on TikTok. Yeah, TikTok shut my live off for 3 days until after the election. Go figure. I must have said something to piss someone off. Rustle a little bit of feathers. Yeah, so we're doing a different approach tonight to be a little bit different. Okay, so Verizon, not bad. I like the way it moves predictably for the year. But look at the numbers. So let's quickly do one. Okay, covered call. I like the 41s. There it is. Let's go to 100 shares. And let's see what it looks like. Here we have it. Okay, so $47 is going to be the profit on this one trade. But it's going to cost 4,000. That's about 1%. Okay, so let's take a quick look. Get my trusty calculator out. If $47 is going to be my maximum profit, remember why I said I like to be consistent and predictable? Simple, safe, predictable, consistent, my profits. Yeah, it's telling me what I'm going to make even before I make the trade. Okay. So it's going to be 47 for contract on Verizon, and it's costing me 4,053, and that's going to be roughly 1.15%. But I'm still losing 6 cents or 8 cents a share when I sell this, so it might come down to like 1%. If you like Verizon, that's always the big question. Always the big question. Do I like Verizon? Okay, that being said, get out of there. Get out of there. Get out of there. All right. That was Verizon. What is next? Next on the list. Okay, so we did all of those. Now we're here. Now Abbott Labs. Cool. Abbott Labs, ABT. ABT. Abbott Labs. Interesting. It's going to be a no for this week, but let's take a look at it anyway. And I'll tell you why I got to the no so quickly. Okay. High, low. Where was it? Where is it? Look at the movement. Up, down, up, down. What happened here? Okay. You can't really see it there, but take a look there. Let's zoom in. Take a look, and I'll tell you why it's going to be a no this week. You can see it now, can't you? Okay, look. Down, up, down, big gap. Here's the high today. Okay, this gap is going to fill. This thing opened up a little bit lower than it closed on Friday, but now she's coming down. Well, that kind of makes sense. Okay, the market maker gave you a gift right here. She opened up. Now she's going to pull it back. So if you don't take your profits quick, you might lose out. So Abbott Labs is going to be a no. Sorry. All right, that being said, what is next? Oh, let's move this over right to about there. All right, so that was Abbott Labs. Next is FCX. FCX. Interesting, interesting. Take a quick look at the chart. High, low, where was it? Where is it? What's the direction? Up, down, up, down. Look at that head and shoulders. You really can't miss that thing. But that's not what I'm pointing out. Up, down, up, down, up, down. Now she's turning right there. Let's zoom into that, take a quick look. Okay, look at that high there. Drops down here, 2 days to the upside. That's like a perfect invitation. Well, let's take a close look at it and see if it actually is. So let's back this up. Back this baby up a little bit. A year ago, we're sitting at 35.37. The bottom of the year was about a year ago. Okay, the 8th of November last year. and that was 32.83. That's the low of the year. Look at the high of the year right here. Let's move it over so we get it. Right there. The high of the year, 55.31 on the 17th of May. All right, fine. What does it mean? Well, just look at the movement. Okay, up, down, up, down, up, down, up, down. She's turning right there. I want to get into that and see that one. Okay, so let's go a little bit closer. Last 30 days. See, the last 30 days paints a totally different picture. This is what tells me when or when not to get into a stock. Your 30-day high was about 30 days ago. Your 30-day bottom was last Thursday. Friday was an update. Today's an update. What does that tell you? Well, I know what it tells me. And I'm not giving this out as a tip or a recommendation. It's just that I love a 30-day top bouncing off a 30-day bottom. Now she's coming back up again. Well, that's what happens with stocks. They go up, they go down. They do not come to your house and wash your dishes. They do not mow the lawn. I leave the door open just in case they want to. Okay, so that being said, seasonality, this thing usually looks like it just kind of goes flat. Ooh, ooh, see what happens when you zoom in? Okay, here we are, right here. It's the end of the year. Okay, so that looks, I must have got a really small amount. Okay, so from the end of the year, here we are. Basically, it's going to go sideways till the end of the year. Alrighty. So let's get out of that. Standard. Let's go back to covered stock and do the 47s. There it is. Let's go to one contract. There it is. And here's the numbers. By one, you covered call FCX 100s. 8 November 24, that's this Friday. The $47 call strike against FCX, 141 is the profit. Okay, not going to be enough. That's going to be just at 1%. Okay, so let's save this one. Is that session 4? And it doesn't give it, it like deleted the whole damn thing. What is the purpose of doing it if it keeps deleting it? Okay, that one's got 1 second left to go to upload, or 1% left, and then I will just do another one on that camera, because this camera's not working. Okay, so let's do this. Okay, what's going on? That camera's like slowly fading away. Okay, so what company are we doing now? Let's get out of there before I start the next video. All right, so FCX is a no. So next on the list, EOG. Take a look. EOG, and that will finish up week number 2 for the first quarter. Week number 2 of the quarter, because week number 2 is the same, the first quarter, second quarter, and third quarter. And I'm not even recording here, so I don't know why I'm talking. EOG. EOG, there we go. Oh, actually, it is recording. It's recording on YouTube down here, everything I'm doing. Okay, that works. Yeah, that does work, doesn't it? Okay, that being said, EOG 125, the 124s. Okay, cool. Alrighty then. Well, let's take a gander. You ready? Let's get ready to roll. All right. Okay, now we're looking at EOG. What is EOG? EOG Rest Incorporated. I don't know. High of the year. Look at the triple. Was that quadruple bottom? A quadruple bottom here. Where it was, where it is. Look at the direction. Basically, just going sideways. Okay, down, up, down, sideways. Okay, basically, same as it was a year ago. Okay, what's the point? What is the point of buying a stock? If you buy it at one point, a year later, it's at the exact same point, and you didn't take advantage of the big drop, or the big uphaul, or the big drop. Yeah, look at all those movements that you could have taken advantage of. But no, last year, it's almost the exact same price as it is right now. So you missed all that movement, all that action, which is okay because some people just have no interest in that. But if you knew you could double your money every year, every 14 to 16 months, if you knew you could double your money every 14 to 16 months, well, it'd be a good idea. And safely, too. I forget that part. You gotta throw the safety part in there because some people quite get mixed up with that one. All right, so EOG. A year ago, 120, 124.69. Got a quintuple, 5. Look at that. Let's go zoom in, see what it looks like. Look at that. 1, 2, 3, 4, 5 times. 5 times 109. It just wouldn't drop below that. So you know that's pretty good support right there. All right, so your high, 139.88. Drops back down to that trading range. Look at the last 90 days. Up, down, up, down, up, down. Now she's going to the upside. That looks gorgeous right there. Look at your high there, down here, moving up. Nice. I like that. So let's zoom into the last 30 days. That looks even better. Okay? Up, here's your high. It drops. Your bottom was last Monday, and you have 1, 2, 3, 4, 5. 5 days going to the upside. Now you have 2 down days, but it's still going towards the upside. It's at 125 at the moment. The 125s are going for 135. That's over 1%. Now ask yourself, do you like EOG? Okay? If you like it, great. Well, let's keep taking a look. So, the seasonality chart. What does this normally do this time of year? Well, it looks like she just goes sideways. Look at that. Looks like she just goes sideways. And I hate saying sideways because they don't go sideways. They just don't go anywhere. They go up, they go down, up, down. They stay in a tight little range or a tight little channel. Okay, fine. Well, what do the numbers look like with EOG? I got this thing reset. There we go, back there. You out of the way. Now, it's currently at 125.23. So we'll be looking at the 125s, and they're going for 135. But I lose 23 cents off of that. But look at the bid and the ask. Okay, the bid and the ask is 135 to 210. Well, the stock's at 125.23. I lose 23 cents right off the top. Okay, so I'm walking away with 113. I could get 125 out of that if I push the issue. Let's push the issue, and I'll show you how to do that. It's not that difficult. The 125's are right there. So, wrong. Okay, let's go back to covered call. There we go. The 125's. There it is. Ringo, bingo. Okay, right there. Back to 1. Okay. Now, this is what it sounds like. By one covered call of EOG, those are the weeklies. 8 November 24, that's this coming Friday. The 125 call strike against the stock. Look at the bottom. Your break even, 121.21. Well, the stock's at 125 right now. So anything above 121.21 is going to be a profit. Okay, so if you do this trade and it works out the proper way, you're looking at $379 per contract, and it's costing you $12,000. Well, let's do some math. So my calculator, clear that out of there. The profit's $379 per contract. Divide that by, what is it costing me? $12,121. And that's a grand total of 3%. Is that right? Okay. I don't know. 12,000, yeah. Maximum play. To 125, lose to 23. Let's deduct the 23 cents out of there and make sure it makes sense. Okay, so let's do the 126s. Oh, wait a minute. Yeah, the 126s. Okay. 469, 12,001. It's almost the exact same number. That doesn't look right. All right, well, let's figure it out. 469 divided by 12,131. 3.8%. Oh, bloody righty then. Sounds good to me. If you like this company, of course. And that's always the biggest one for most people to try to grasp. Do I like this company? Do I even want to buy it? Do I even know what they do? And those are questions you ask. I know what they do. It's like, that's why they're on my list. Okay, so next one. Next one, EOG. Here we go. Caterpillar. Cool beans. Caterpillar. 120. That's the dividend. Okay, so let's take a look at Caterpillar. CAT. Yeah, that's not making me happy looking at that. That's going to be a no right off the top. Okay, here's the high of the year. She's drooping down. Here she is now. Let's take a look at the last 30 days because that doesn't look very good. Total different picture. Imagine that. Look at that. Here's your 30-day high, your 30-day bottom, 2 days the upside. This is throwing a wrench, a monkey wrench in the works of life. Okay, I said 2 days the upside. Okay, if today dropped lower than Friday's close, then it's going to be a no because it's not continuing to the upside. Is what it is. All right, so let's stop this one here. 10:50, is that right? 10:32 p.m. What was that? There we go. Okay. Session 5. That's not working. Session 5, 10:33 p.m. Okay. What's up? What's the knowledge? Oh, what do you feel like hearing? Got a lot of stuff. Yeah, I wonder how that's going to work out. So Caterpillar. Yeah. Alrighty, next on the list. Next on the list is going to be Procter and Gamble. Procter and Gamble. They got a 91-cent dividend. So let's take a look at Procter and Gamble, see what that looks like. Procter and Gamble. What the heck's going on here? I don't want that. I don't want that. What the hell is this? All right, this is making no sense to me. That's weird. All right, that's Caterpillar. Next one, we're going to take a look at. That was why it wasn't working right. Okay, Procter & Gamble. Procter and Gamble. That looks much better. Okay, here's your high, here's your low, here's where it was, here's where it is. Look at this. Up, down, up, down. Yeah, she's dropping at the moment, coming off of a high. It looks like something we want to sit back and watch. not actually participate in. So we'll put Procter and Gamble down because it's going to find a bottom soon. Okay, zoom into this. Take a look at this. Okay, see how she's dropping 30 days ago? Was the high 175, dropped, retrace, drops again. Here's a new bottom today, new bottom Friday, a new bottom Thursday, new bottom last Wednesday, new bottom last Tuesday. Just keep on dropping, trying to find that bottom. So we'll keep our eye on it. I like Procter & Gamble, but before we do, let's see what the numbers look like. Is it going to be worth our while to look? 165, the 165 is going from 152 to 165, barely make you 1%. You're going to lose 23 right off the top. It's going to be a no. Sorry. No for, what do you call that? Procter & Gamble. What a bummer. Okay, Procter & Gamble, ZTS. Wait a minute, is ZTS, I'm pretty sure ZTS is a monthly, isn't it? Yeah, it is. I thought I'm supposed to be there. Oh yeah, look at the next book, clean, yep. I didn't quite get that whole comment. Yeah, textbook, clean, double tap, tall. It's time to sell. Speaking on Louisiana, start trading stocks. I'm just trading futures. Ah, yeah, futures. Now, if you're trading futures, you should really take a look into the Commitment of Traders report. Very valuable information in that. And I think it's free too. All right, let's roll. ZTS is a no. Don't even know why it's on the list. Next on the list, look at the next one right here. Apache, Bank Mellon, Clorox, not Clorox, Colgate Palmolive, CL. Okay, Apache, APA. APA. Ooh, look at that drop. High, low, where was it? Where is it? Look at the drop. Down, up, down, up, down, up, down. What is she doing here? I want to take a quick look to see if it's even worth wasting our time at it. Yeah, only one day to the upside, so it's going to be a no. Okay, it's going to be a no while we wait for it to find one more day to the upside. So, stair step down, pretty cool. But let's zoom in, take a look at the last 30 days. Okay, so here's the last 30 days. Okay, up, gap down, up, gap down, up, down, up, gap down, up, down. Now she's turning around right here. We got one more day to the upside, so we're going to take a look at it tomorrow. APA. Because if that thing can turn around tomorrow and go up one more day, that's 2 days to the upside. That's where I like jumping in. Okay, so 23.55 to 23.50 is going for 77 cents. That is almost 3%. I like a 3% trade. Not, yeah, it would be. It's 23.50. The 23.50s lose 5 cents off of that, so you're walking away with 72. 72 on $23 stock. That is 3%. Okay, but I like 2 days to the upside. It only has one. So APA is on the list. What would it look like? Wait a second. Let's take a look at seasonality. See what that says. All right. Oh, bloody right. Yeah. A little to the downside. Look at that. Going to go sideways for about a week and slowly trickle away. Now, that's not guaranteed. That is just historical performance. It doesn't mean it's going to do that. It just means it might do that. All right. Alrighty. So that being said, let's go back to see where we were and pick up another one. BK. That's Bank Mellon, isn't it? BK. That's a monthly at, it's a no, look where it is. There's the high right there, and it's coming on the downside, and it's a monthly. With 3 strikes, you're out. CL, Colgate Palmolive. Ooh, interesting. Take a look at that. Hold on, let's get this video cranking up. It's at 99%. We got 1 more second to go, and then we'll do another recording with Colgate Palmolive. Come on. Anyway, so that being said, I'm just progressing forward. It's 10:40. We got another hour to go. Let's see how many more of these I can do. I'm going to have to do the same thing again tomorrow night, too. It's just not working. Why is that taking so damn long? All right. Can't find you on TikTok. Yeah, I know. TikTok, I got, I don't know, was that call that red flag? Said, you can't do any more live broadcasts until the 6th. It's like, that's just after the, what do you call that thingy? The election tomorrow. By about time it's here. My goodness. It's here. It's going to be done and over with. Wonderful. About freaking time. Why is that taking so long, that last 1%? Anyway, so we're going to be looking at Colgate-Palmolive. Let's take a quick look at seasonality before we even jump in to that. Nice. Nice upward move. Okay. So I hope everyone's doing well. Well, I'm waiting. It's like at 99%. Like 99% for the last 3 minutes. How much for that last 1%? Double checking my spelling or something. There it is. Let's get started. There we go. And record. Alrighty. Now we're in session number 5. It is 10:42 p.m. All right, 10:42 p.m. Session 5. Let's take a look at this. Colgate-Palmolive, ticker symbol CL. First thing we'll look at is the chart. The high, the low. Where was it? Where is it? Up, down, up, down, up, down. Now she's turning right here. Let's zoom into that really quick. See what it looks like and see if it looks enticing. Well, it does. Because Friday, what looks like it gapped down, not last Friday, but the Friday before, and then kept on dropping. Today, she's up a little bit higher. So that means this right here could be indicating that that's a 30-day bottom. I love a 30-day bottom because you don't make any more money than you possibly could buying low and then selling high. And you can't get any lower than the low of the year. You just can't. It's the low of the year if you like Colgate-Palmolive. So let's take a quick look at all the numbers and everything. Last 30 days, well, it makes it a little bit clearer, doesn't it? Okay, she was at, 99.50, jumps up to 101, drops all the way down to 92.10 it looks like, and today is just a little bit higher. Great. Well, what can I buy it for tomorrow? 93.61. The closest strike price to 93.61 is going to be the 94. That's going from 80 cents to 90 cents. Do you know what that means? That's less than 1%. That means, no thank you. Sorry. I like the company. It's been around for a long time. It is a dividend king. They have increased their dividends for more than 5 decades, but the numbers just don't work for me. It's not 1%, so why would I want to do it? Why would I risk my money on a company not paying 1%? So let's go to the next one. What is the next one, you ask? Lowe's. Ooh. L-O-W. Interesting. Take a look. High, low, where was it? Where is it? Up, down, up, down. Now she's going to the upside. You can barely see the 3 lines right there turning around and going up again. Well, great. Let's see what the numbers look like. Before we even zoom into the chart, it's currently at 265.50. Well, 265.50 is going for 590. That's just a little bit shy of 2%. All right, well, I like 590 on Lowe's. I know what Lowe's does. I know who Lowe's is. So let's take a gander. And the low of the, that's funny, the low of Lowe's for the low of the year, 190.60. She shoots up, pulls back, shoots up. There's the high of the year right here, 287.01. And that was the middle of November. Okay, she shoots up, pulls back. You see right here, last week, this thing finds a bottom. It looks like Wednesday. Thursday's up, Friday's up, today's up. That's 3 days to the upside with a new bottom. Let's zoom in for the last 30 days. Because 30 days gives me a great idea of where do I think it's going to be by this Friday, which is only 4 days away. Okay. She found the bottom here, turns around, here's your high, 286.50, drops all the way down to here to 260, 3 days to the upside. Thursday, Friday, and Monday. Okay, that looks like it's going up. Well, before we jump on board, let's take a look at the seasonality chart to give us an idea what this thing has done over the last 10 years or during this time frame. Well, look at the steady growth here. Steady as a rock. Look at that. Nice and flat, tiny bit to the upside, a tiny bit. You know, it has some growth every year. Great. Well, that's what people are looking for. Nice, safe, simple stocks. Okay, I don't want anything wild. I don't want anything crazy. I want something flat, steadily going up. Now, Lowe's is a dividend king. They have increased their dividends for more than 50 years. That's 5 decades. Okay, so let's jump in at the 265.50. Let's get out of that. Right back there. Let's go over there. Let's change this from single to covered stock. The 265.50s. 265. They don't have a 265.50. All right, well, I'm losing 7 cents a little bit right off the top. Let's change this to 100. Okay, and here's what it sounds like. You ready? Buy one covered call of Lowe's 100s. Those are the weeklies. 8 November 24. That's this Friday, 4 days away. We're buying the stock. We're selling the 265 call against Lowe's at the limit order. Anyway, break evens 260.38. Well, currently the break even right here. Look at this, 260.38. The stock is currently at 265.50. So anything over 260.38. So the stock could come down a little bit and still be making money on it. Okay. The max profit on this particular trade, 462. Now that's great, 462 for one contract. Here's where it's going to get a little uncomfortable. Okay, you ready? Clear that. 462. Now I'm going to divide it by, because 100 shares of Lowe's is going to cost $26,038. $26,038, and that comes to a grand total of 1.77%. So the higher the stock price, the more money you got to put out, but the percentages are still the same. This is 1.7%. If you like Lowe's, I like Lowe's. I buy Lowe's almost every quarter because the numbers usually always work. So it's sure, why not? It's Lowe's. Okay, back to where we were. Let's get back to the next one on the list. The next one on the list is PFE. That's Pfizer. Pfizer, let's take a quick gander at Pfizer and see if we can get a twofer here. PFE. That's going to be a no. Reason being, look at the drop from the 30-day high to where we are now at the 30-day bottom. This is going to turn around any day now. So we're going to write it down for next week, because it's going to find its bottom sooner or later, whether we like it or not. Okay, could it continue down until this Friday? Yes, it could. But is it going to? Look at that. It's 1 week, 2 weeks, 3 weeks. Almost a whole month straight down. Yeah, that thing's going to find a bottom, turn around, and go back up again. Okay, so not this way, because what does it normally do this time of year? Normally, this time of year, okay, looks like a little bit of a drop this week, okay, goes up next week, sideways for a bit, and then shoots up. Okay, that looks fine if you like Pfizer. What does the number look like? The number for Pfizer at the 28, which is where it's at currently, $50 per contract. All right, so let's divide it out. Clear. $50 divided by 2,700. and that'll give you a grand total of 1.8% for the week. Okay, 4 days, 1.8%. That's not that bad if you think about it. 1.8% for 4 days. Now, if you do that every single week, 1.8%, that's close to 100% return at the end of the year. Nice. Well, I'm averaging at the moment over 1%, so it works good for me. 1.8, yep, I love it. But the question is, do I like Pfizer? And do I like Pfizer at this current price? Valid question. Let's get out of all this stuff. And we're done there. And that was session number 6. I'm getting the hang of this because they won't let me do it the way I want to. Session 6, 10:51 p.m. Off to the races. All right, next. Come on. All right, so it's going to the next, and then we publish that video, then we go to the next one. Let's get back out of here. Now, that was Pfizer. Pfizer's right there. Next on the list, AGNC. I like AGNC. Well, let's take a quick gander at AGNC. AGNC. All right, AGNC. Here's the high, here's the low, here's where it was, here's where it is. Look at this, up, down, up, down. What's happening right here? Look at all the volume. It's a lot of volume there. So let's zoom on in, see what it looks like. Is it even going to be a contender? Ooh, 1 day to the bottom. Okay, here's the 30 days. Look, 30 days ago, that 1030 shoots up to 1060, drops. Friday is the 30-day bottom, which means today is 1 day to the upside. I like 2. So I'm going to be writing this one down, AGNC, but before I do, 939, the 950s are going for 5. Yeah, no, it's not worth it. Sorry. Take a look at the numbers. Okay, the chart may look okay if we can come up with another update tomorrow. Okay, 30-day high, 30-day bottom, 2 days the upside, great, time to jump in. But is it worth jumping in? Well, 939, the 9s are going for 36. That just doesn't make any sense. And the 950s are going for 5 cents. Yeah, no. You're going to find some companies have great premiums and some don't. AGNC, no thank you. That's a no. So let's move on to the next one on our list. EPD. EPD. Well, alrighty then. EPD. Enterprise Products Power, whatever. All right. Here's the high. Here's the low. That's where it was. This is where it is. Look at the direction. Up, down, up, down, up, down. Now she's turning right here. I want to zoom in, take a look at it, see if it's worth our while to jump in. Oh, nice. I like that. Let's take a good look at the charts to get a better idea of what the numbers look like. All right. Now let's move this over. Wait a minute before we do. Wait a minute. Wait a second. Before we do it, let's check at the numbers, see if it's even worthwhile. 29.23. So we're like 29.50s. 5 cents. Yeah, no thank you. Sorry, I almost got carried away because I like what the chart looks like. Just because the chart looks good, the numbers don't work. Sorry. No to EPD. Next on the list, MS, Morgan Stanley. How often do we get Morgan Stanley on our list? Wait a second. Yeah, this is going to be a no also. Okay, very first thing I want to see, the high, low, all that kind of stuff. But here's the high. She's down here, coming to the downside, way too high here. Look at all this space. Okay, this is too close to that. So that's going to create what you call uncomfortable. this for me. Okay? So we get 30 days. Yeah, 30-day bottom, 30-day top. Way too close to the 30-day high for my taste. Okay, let's go to the next one. NOK. That's Nokia. NOK. I didn't even know they were still in business. Well, these are going to be a no also. Okay. Look at your high right here, the high of the year, just coming off. Look at all this space down here. Now, it just doesn't make sense to me. Nokia. Texas Instruments, TXN. TXN. Interesting. Okay. High, low, where was it? Where is it? Where is it going? Up, sideways, up, sideways. There's your top right there, your bottom right there. We are currently at 204. The 205 is going for 261. Okay, that's over 1%. The 202.50s, okay, I'd be losing 2. Yeah, no. The 205s, you should do a little bit of math in your head. Okay, 204, 1% is $2.04. Okay, just move the decimal point over a couple places. That being said, let's take a gander at it. A year ago was the bottom of the year, 143. Look at where she tops off about 90 days ago. 214. That was the end of August. Okay, but look at the movement over the last 3 months. Okay, last 3 months. Here's the bottom right here. Actually, a double bottom for the 90 days. Up, down, up, down, up, down. This one's going to be a no only because look at the last 30 days. Well, it looks like it's going to be a no. Yeah. Sorry, it's going to be a no. Look, down, up, down, up, down. No, not quite to the upside because today, see, Thursday was a bottom off of this top right here. Okay, one day to the upside, one day to the downside. Kind of cancels each other out, so now I need 2 more days to the upside. My shoulder can you imagine my shoulder get sore just by lifting it? Yeah, I'm a little out of shape. Anyway, so no to Texas Instruments. Let's jump on and take a look at something else. KBH. Isn't that KB Homes? KBH. KB Homes, yeah. That's a monthly. What the heck is it doing here? Costco. Ooh, how did Costco sneak its way in? C-O-S-T. Oh, I know. They did a 10-to-1 split. Now that's going to be a no. Look where it is. I don't know. Wait a second. Wait. If I zoom in last 30 days, that changes things. Yeah, that changes things quite a bit. All right, so let's go back. See, here, the 1-year chart, it's a no. But when you zoom into the 30-day chart, it's a yes. All right, so let's take a look. High, low, where was it? Where is it? This almost looks the exact same last chart we just looked at. Okay, up, up, sideways. Currently right here, 885. A little out of my price range, but let's keep taking a look. Last 90 days, well, it looks like a bowl of soup. Looks like noodle soup, doesn't it? Okay, here's your high, here's your low, here's where it was, here's where it is. Look, up, down, up, down, up, down, up, down. Now she's going to the upside. This right here makes it look a little enticing. So let's zoom in and take a look at that 30 days. There we go. Total different picture looking at the 30-day chart. Okay, 30 days ago we're at 880. Shoots up to 910, drops down to 880 again, back up to 905, drops to, what is that, 865? Okay, down, finds the new 30-day bottom right here. 1 day to the upside, 1 more day to the upside, then jump in if you can afford $800 a share. I can't, but you know, I'm glad that you think that I can. Okay, so that being said, let's see what we can find next. Costco, what is that? NSC. What is NSC? NSC. Norfolk Southern Corporation. Okay, interesting. Okay. High, low, where was it? Where is it? Where is it going? Up, down, up, sideways. Interesting. Okay. Now, let's zoom in quick, see if it's even worth our while to look at. No, it's not. Okay, last 30 days. The only reason why I say look at the last 30 days is down, up, down, okay? It's going to find a bottom and it's going to turn around eventually. Okay? Not quite yet, but it's going to. Alrighty. Video's ready to play again. So, I don't like the way this looks right here, but what do the numbers look like at 247? 260, you got to be kidding me. Should be closer to the 248 or the 247.50s. Yeah, the 250s. Okay. Okay. Right around there. But still, I want to wait till it finds the bottom, turns around, goes back up again before I think about jumping in. That's the only way it makes sense to me. All right, so let's get out of this one. Wells Fargo. Ooh, it's one of my favorites. WFC, Wells Fargo. Oh, that's going to be a no. Look at that. Okay, 30 days ago. Here we are down at 54. Shoots up, pulls back. Yeah, that'll be another, what, 2 weeks before we see Wells Fargo again? Okay, I don't think it's going to drop that fast, that quick. Okay, Wells Fargo. WFC. All freaking reading. All right, what's next? So no to Wells Fargo. BX, that's Baxter. Isn't Baxter Energy BX? BX. Try it again. BX. Oh, Blackstone. Are you kidding me? Blackstone? Okay, Blackstone's going to be a no. Okay, only reason. 30-day high, 30-day bottom. Look where it is. Look at all that space right here. All that space right there. Okay, 30-day high, 30-day bottom, all this space right there. It's begging for some profit taking. Not where I want to be. Okay, BAK. C, Citigroup. Ooh, Citigroup usually has some really nice premiums. Interesting. Take a quick look here. That's going to be a no also. Okay, look at the high here, low here, up, coming down now. So the next week or so, Citigroup, I'm going to write it down for the next week. We'll take a look at it. Okay, once that baby comes down, I like Citigroup. It has nice premiums. Look at it, 62.60. The 63 is going for $1.08. $1.08. That is, well, 1.5%. Okay, I can deal with 1.5%. Next. COF, Capital One Finance. COF. No, what a bummer. Look at that. Got a big gap here. Look at the movement. 30-day bottom, 30-day high, gap here that's begging to be filled. Yeah, it's coming to the downside. So, Capital One Finance, 2 weeks. Okay. We'll write Capital One Finance down 2 weeks from today. COP, Capital One Finance. Next on the list. NEP. There we go. No. Wait a second. Ooh, holy shit. Okay. Session number 7. It is 11:05 p.m. So let's take a quick gander at it. So, NEP is next on the list. Okay, right over here on the, what is that, 5th week of the quarter. We're doing quarterly, and then we're doing, 13 weeks in the quarter. So, next on the list, oh, we're on NEP at the moment. So let's finish up with NEP. Damn, NEP's a monthly. That's going to be a no. It almost sucked me in. Look at this right here. You got a drop, got a gap down and a big drop, and it kept on dropping. 30-day bottom right there. It's actually a bottom for the year also. You're going to make most of your money buying low and selling high. I don't like monthlies. The numbers just don't work. But look at that. Nice. Always bouncing off of a bottom, filling a gap. Ooh. All right. Is what it is. All right, so that's everything for the month of January. That's week number 1, week 2, week 3, week 4, week 5. We got 8 more weeks to go. Ain't gonna do it all tonight, but guess what? I'm banned tomorrow night also, so we're gonna do the other half of the list. So I got 3 nights that I'm gonna be doing just all this kind of stuff. Okay, next on the list, check that out, DHI. DHI. Interesting. Okay. First thing, as always, high, low. Where was it? Where is it? What's the direction? Up, down, and she's turning around, going back up. Look at the gap down once, gap down twice. That ought to look interesting. I want to find out why it dropped that much. And look at how much volume spiked up that day. That's huge. Well, let's take a deeper dive. But before we do, is it going to be worth our time? Is it going to be worth my time? Okay, I'm very picky with my time. I can buy it at 174.17. So the 175s are going for 245. That's over 1%. It's close to 1.5%. Fine. Let's take a look. Okay, DHR a year ago was the bottom of the year at 116.98. The top was a couple of weeks ago on the 19th of September, and that was 199.85. Look at the drop. And then from the high of the year down to here, now she's going to the upside. Let's zoom in a little bit closer. We want to take a look at the last 30 days first. 90 days, sorry. Here you go, last 90 days. Take a look at the movement. Down, up, down, up, down, up, down, up, down, up, down. Big drop. Drop here. Okay, as I get one gap here, there's another gap here. This gap is starting to fill. It would be nice if that one filled also. Let's zoom in and take a look at the last 30 days because that gives me a better idea of where I think it's going to be by the end of this week. Okay, we're looking for opportunities this week. So 30 days ago, 190, shoots up to 195, dropped with a double gap down. One gap down, 2 gap downs. Now we're down at 154. 1, 2, 3, 4 days to the upside. Nice, I like that. And look where the high is. High is way up here, and your bottom's down here. So you're in the lower half. So you got plenty of space up here to come. And the 175 is going 245. Let's take a look at that number and see what it looks like. Okay, change this over to covered stock. Down to the 175s. There it is right there. Just 100 shares. There we go. And what does it look like? Here it is right here. Buy one, covered call DHI 100s. Those are the weeklies. 8 November 24. That's this coming Friday. It's only 4 days away. The 175 call option against DHI stock. Well, what's my break even? My break even is 168.19. Well, the current stock price is 174.17. So that's way below. $6 below. That's below. All right. Maximum profit 681. It's going to cost 16 grand. Okay, so let's do the calculation real quick. 681, clear that one. 681. Divide that by 16,819. 4%. I'm writing this sucker down and circling it because DHI is on my list. DHI. Cool beans. Okay, that's a 4% trade. But the big question, as always, does it make sense? Do I like this company? Do I like this company at this current price? Does it make sense? It's a yes, no question. Dennis sent a request to be in your live video. Well, Dennis, give me a couple seconds. Let me finish off this video, and then we'll move on and we'll bring you on because, you know, you've been here long enough. So that's a yes for me. For me, it's not a tip for you guys. I just like the numbers. I like the way everything looks. I like the setup. But it's not a tip. This is for entertainment only, where I sing and dance badly for your joy. Okay, anyway, that's DHI. Next on the list, Intel. Ooh, I like Intel. INTC. Let's try that one more time. NTC. Alrighty, now just to let you know, I do own some Intel. I'm not doing this to sway your opinion whatsoever. Okay, here's the high of the year, here's the low of the year. Here's where it was a year ago, here's where it is now. She went up, she dropped, went sideways, dropped, went sideways. Currently sitting at 22.50 at this moment in time. Okay, well, 22.50, the $22.50 call strike for this coming Friday is going for 66 cents a share. That is almost 3%. Let's take a better look. Okay, a year ago we're at 38.28. We topped off at the year end of last year 51.13. The bottom of the year was just a couple of weeks ago. Okay, that was the 10th of September, the 10th and the 11th. That's kind of low. Okay, the last 30 days. Here's the last 30 days. If you like this type of a trade, down, up, down, up, down, up, down, up. Now she's coming down. Now she's coming down. Intel. Okay, I like Intel. It is on my list. Now, with a big drop like that. Now, we talked about this last week. Okay, last Thursday had a big drop. Let's get this way. Okay, last Thursday, last Thursday had a big drop, making a new 30-day bottom. Well, Friday, look what happened on Friday. Big jump up by the market maker, kept on going all the way to challenge a 30-day high, didn't quite make it, but look at the long tail. Okay, it had a range yesterday at 167, which is kind of odd. But today, she pulled back a little bit. So more than likely, she's coming down before she turns around and goes back up again. Well, that's Intel. Not making it for me this week as an opportunity to jump in, but I do already own some, so that's not that big a deal. All right, I like Intel. Anyway, it's what it is. I think we have enough to do one more video. Session number 8, 11:14 p.m. Let's post that one. Okay, waiting for it to post, and then we move on. Post. Hey, Mr. Postman, look and see. All right, so while that's posting, let's take a look and bring Mr. Dennis online. Can't find you on TikTok. Yep. So, Dennis, I sent the invite for you. Where'd you go? All right. I sent him an invite. There it is. All right, well, all right, Dennis, I sent you an invite. I don't know how it works on Instagram, yeah. Guys, he's actually saying Mr. Postman and James is a full-blown racist. Oh my God, really? How do you get racist after singing Mr. Postman? What are people nowadays? Song from the 1950s. All right, so That's Intel. What's next? MetLife. M-E-T, MetLife. Ooh, that looks interesting. That's funny. Okay. All right, so MetLife, let's take a quick gander. High, low, where was it? Where is it? What's the direction? Look at this. Up, sideways, up, down, big gap down. I always say this to people, if you don't take your profits when they're there, the market maker will take it away from you. Uh-oh. I can check out some of those questions. I love the content, but I think, no, I was not. I ain't no freak, brother. Sorry. I'm just a normal, average, everyday guy. All right. So, MetLife is currently at 79.58. The closest one's going to be the 80, and that's going to be a no because it's not even 0.5%. Okay, not even 0.5%. It's going to be a no. So, let's move on to the next. Next, MetLife, Nokia. Didn't we take a look at Nokia earlier? N-O-K. Yeah, Nokia is going to be a no because it's way too close to the high. Okay, so no for Nokia. All right, next on our list is going to be Schlumberger, SLB. I think this might be the last one for the night. Interesting. All right, now, Schlumberger is going to be the last one for the night. High, low, where was it, where is it, what's the direction? Well, you can plainly see the direction. It's going to a downturn. Okay, do the numbers work? Do we need to take a look closer at the chart? Well, let's take a gander. 40.38. The 40.50s are going for 68. That's more than 1.5%. Great. What's the chart telling me? Let's take a look at the chart. If that works, wonderful. Okay, a year ago was the high of the year 57.47. Okay, she drops, finds the bottom. What is that? Almost 2 months ago, almost 2 months ago, on the 11th, 30.66. Okay, down, up, down, up, down. Okay, she's turned on Friday. Today was a higher day, so tomorrow it might be a good opportunity. Okay, SLB. Let's take a look at the last 30 days. Okay, love that. Look at it. It's awesome. 30 days ago was the high, 36.25. Drops down. Friday, yesterday, was the bottom, 39.80 looks like. Okay, now what does it normally do this time of year? Well, this time of year, yeah, that don't look good. Yeah, this time of year, give me a week going sideways, then she slowly trickles off towards the end of the year. I'm going to think that's not that wonderful, in my humble opinion. But you have to ask yourself, how much information does that have towards it? Because that's only historical performance. You can't really judge a movement by historical performance. It just gives us an idea. That's kind of like driving forward, looking in the rearview mirror. Okay, well, you get the windshield in front of you, and it's this little tiny spot. It's like, oh, this is where we've been. Okay, remember the rearview mirror while you're driving? You know, this is where we've been. That's what's behind us. So, the seasonality always gets trumped by the actual trend, the current trend. Okay, so right now, the current trend is to the downside. But today marked a point where it's probably going to go to the upside, turn around, and start going up. Okay, if that's so, let's jump in, go from there. Coach Joel, how are you doing over here, Coach Joel? Yes, I know I'm not streaming on TikTok. I got booted off for 3 days, okay? Because apparently I offended somebody. Is what it is. All right, so we're going to keep an eye on SLB to find out if tomorrow is going to be to the upside, and it's giving over 1.5%. But I like 2 days to the upside, so we're going to pace ourselves and not quite jump in there. All right, so what does it look like? All right, let's take a gander. It's currently at 40.38. We want the 40.50s. Let's jump over to a covered. That's a collar. That's a synthetic. No, no, no. I don't want a collar. I want a covered stock. There we go. And then I want the 40.50. There it is right there. Let's go to just 100 shares, one contract. Thank you kindly. And here's Johnny. Tell him what he's won, Bill. All right. Buy one covered FLB 100s. Those are the weeklies. 8 November 24. That means it is expiring this Friday. Gives you 4 days for this particular trade. Now, 8 November 24. That's this Friday. The $40.50 call strike against the stock. Okay, right now it's at 40.38. The break even is 39.63. So anything over 39.63 is going to be a profit. Well, what does it look like? $87 per contract, costing $3,900. Okay, well, let's get the calculator out. $87 for the contract, and it's costing $3,963. Well, it gives me a total rate of return of 2.19. Well, 2.19 is not bad for 1 week, actually 4 days. If you think about it, that's like 0.5% a day. Yeah, it would be nice if you knew that ahead of time. But that's just it. All right, we got 8 minutes left. Let's see if we have any questions, because I don't have enough to do another recording. So let's take a look at the questions over here. All these questions. Why do you keep passing me over? Where to look at me? I try you question, but you always get mad. Sorry, Slime. The world is about to have, yep, ALB, we looked at that one, ALB, we looked at that one. ATL. Stop spamming, please. Yeah, thank you for that. Seems like he's angry. I'm not really angry. It's just, I got booted last night for some stupid reason. Somebody thought I was rude. He's just focusing. Thank you very much. Thanks, Adam. Do I use RSI? I don't use RSI. I don't use any indicators at all. What stock is that? Or Firex? No, I don't know that one. Forex? No, I don't do Forex. Line time. When your price falls and it hasn't been assigned, I've figured out that I can keep selling each week at a lower strike price so long as I can make sure I can roll it on Friday. Oh, Adam, that's a lovely idea. Huh? Are there people making a living with a strategy like this? Seems possible. Not a recommendation, by the way. Okay, but Slime, think of it this way. It really depends on what you're starting out with. Okay, so if you have 100,000, right, and you get 1% every week, that's 50,000 a year. But depending on where your situation is, with your taxes and whatnot, that might eat away at some of that. So if you take whatever account you're working with, you cut that in half, that's about what you'll bring in at 1% every single week. Okay, more questions. 99% of gamblers quit before hitting big. Okay. Tell the roadmap of becoming a professional trader from start to finish. Peace and love, how are you today? Well, first of all, you got to find a trading strategy that works. Felix, no, it has nothing to do with TikTok not working. Apparently I offended someone, so they're putting me on probation, or they're making me wait a couple of days. So as I was saying, if you plan on living off of this, you have to have enough starting capital in order to meet your needs. Okay? So that being said, what do you need on a monthly basis? If you need $10,000, well, that's $250,000. $250,000, 1% per week is $2,500. $2,500 multiplied by 4, usually 4 weeks in a month, that's $1,000 a month. Wait a minute. No. That's $10,000 a month. Wasn't that $10,000? No, wait a minute. 250, 25, 25. Let's Yeah, that's 10 grand a month. It's 250,000. If you need 10 grand a month. Now, if you need 3 grand a month, well, that's, hold on a second. 3 grand a month would be 15, would be 75,000. So 75,000 at 1% per week is 3,000 a month. So it all depends on what you need in order to get by. All right, that being said, my eyes are getting heavy, my sights are dim, it's time to stop for the night. So you guys have a great day. I will see you guys again tomorrow night. We're going to do the same thing tomorrow night. We're going to go through the rest of the list. Get out of that. Get out of that. Okay, so we ended up on Schlumberg. Okay. At 6, 7. This is week number 8. Okay, so we got 13 weeks to go. This is week number 8. So we got 8, 9, 10, 11, 12, 13. So 6 weeks. We should be able to do that. If we did 8 weeks tonight, then we should be able to do 6 or 7 weeks tomorrow. That's all 13. There's 13 weeks in a quarter. Okay? So I got 300 stocks we're going to look at one at a time. Alrighty. All right, I'm going to call it a night. You guys have a great night, and we will see you again tomorrow. And now the time is near, and so I face the final curtain. My friends, I'll say it clear. I'll state my case.